Hi everyone. We're going to talk a little bit about Jackson Hole. Jackson Hole, the meeting of the main central bankers, ended up being a non-event. It was probably expected because the messages from both Yellen and from Draghi were very vague. However, the market took them very seriously. The euro immediately shot up against the dollar, and the market started to perceive that what was happening was that despite more than consensus estimates growth, better unemployment and positive inflation data, the Federal Reserve is too scared to normalize its monetary policy according to what they have mentioned. Therefore, the expectations of increasing interest rates and starting to unwind and reduce the central bank's balance sheet started to come down. That's an important factor. Be very aware of the fact that the Federal Reserve is not doing what it mentioned it would do. And if it doesn't start doing it soon, the market will start behaving as if the Federal Reserve is more worried than optimistic about the economy. Draghi, on the other side, keeps his aggressive stimulus package and his aggressive stimulus policy. However, it's not working. No devaluation, no inflation. Very dangerous for their objectives, not for the consumer, not for companies, but definitely very dangerous for the objective of lowering debt and improving the economy through inflation and through devaluation. Not working. Therefore, that is a big risk, because if the European Central Bank decides to maintain its monetary policy, the 1.7 trillion euros of excess liquidity start to become a problem. And if it doesn't, it will probably cause a havoc in the markets that have been too obsessed about buying into European equities just for the monetary policy. On the other hand, what are we seeing? Lower dollar, lower oil prices. The market is very, very well supplied, not just because of the general environment, but think about this: in the middle of a hurricane season with the Harvey disaster, let's pray for Houston, what we have seen is that the oil price continues to fall. So let's be very aware of what that means. It means that international growth and expectations of demand are not that achievable. Second, gold prices. Gold prices are going up. Why? Because the market starts to perceive that central banks are unable to get out of their expensive monetary policy and that they're too scared. And therefore, the currency debasement and currency manipulation will continue. Let's pay a lot of attention to this, because it means uncertainty, and the market is too aggressively positioned for exuberant growth and inflation improving. Thank you very much.